So it's really not that common, contrary to popular belief, to see companies that are $100 billion, $200 billion plus to lose 20% of their value just like that. However, this earnings season, it seems like it's becoming a lot more common, and there are some massive businesses down huge. First, we saw Netflix earnings, and that pretty much kicked off earnings season with a minus 20% drop. Then we had a couple more stocks report that saw double-digit drops. Today we have Facebook that's dropped over 20%, Spotify hit over 20% below, and in this video we're talking about PayPal, another stock down over 20%. So PayPal has actually fallen off a cliff here after reporting earnings, and we can add it to the list of darling 2020 stocks that has seen their valuations slashed in more than half. We can see here since its peak of over $300 per share, PayPal has lost nearly 60% of its value. The narrative has quickly changed from companies like PayPal and Square being the future of fintech to now, are they gonna grow? Is the story done? Do they have a bright future ahead of them? It's really remarkable how quick investor sentiment can change. Now, from their Q4 numbers, PayPal actually didn't do all that bad. EPS, had a slight miss. Revenue had a slight beat. Overall, it was up 13% year over year for its revenue. So, pretty good overall in my opinion. They also shared total payment volume grew by 23% year over year. Strong growth here in usage, and they managed to grab just shy of 10 million new users to the platform. So looking at this part of the earnings alone, you're probably thinking, okay, they had a small miss on EPS, but that's okay because they're still growing quite well. What's up with this massive drop? Well, I agree. The first part of this earnings looks pretty good. The second part, though, is where investors had some questions. Guidance here for Q1 was concerning. They expect EPS of 87 cents versus estimates of $1.16. This is a huge miss, guys. Over 20% miss. Revenue growth expected is single digits. Again, not impressive for this business. For the full year, again, EPS missed substantially and revenue growth expected to be slower than in 2021, coming in around the mid-teens. Finally, net adds for users expect to be around 15 to 20 million, but total payment volume that we just saw grew over 20% year over year is expected to actually grow slower in 2022. So guidance here was not what investors want to see. They want to see a company at least meet on their guidance, ideally beat. But in this case, we actually got revisions down on guidance, signifying some core issues around their business. In other words, PayPal is predicting weaker demand for their products and services. Now, for the last couple of years, PayPal has seen its multiples expand quite nicely, going from a 30 PE, which is quite reasonable for a growth name growing like 20% or so per year, to over a 60 PE at its peak. Since then, though, the PE has dropped back down to around 30 PE as investors have sharply sold off the stock since late 2021. PayPal was priced like a high growth company because it was a high growth company. They were given the benefit of the doubt through 2020, 2021, the new revolution, fintech, they're, an all-in-one super app type platform. Everyone wants to use PayPal. So investors flooded money into the stock. But here's the thing, when your expectations are that high from investors, you better not miss on your guidance or your earnings, and unfortunately PayPal did. So what we see now is pretty much the stock getting re-rated lower. Investors are now accounting for slower growth, a lower PE because it doesn't deserve a higher multiple, and that is all turning into this massive selling frenzy that we're seeing in PayPal stock today. Essentially, PayPal's kind of losing its title of a growth name. Now guys, here's the thing. If we look at analyst estimates, we can see PayPal should be able to compound its growth for many years, all while maintaining strong free cash flow numbers. But it seems like the growth expected here just doesn't justify the premium valuation that the company has received in the last couple of years. The other metrics I noticed that was a kind of a bit of a head scratcher here was the gross margins. They are expected to contract in coming years, but they've gone from around 60% or so down to around 50% in coming years. Typically, when businesses mature, their margins expand and stay pretty consistent. But in PayPal's case, we're actually seeing it contract here, which isn't a positive sign once again. So PayPal has seen quite a few headwinds here, and they're going to continue seeing that for the foreseeable future. And sentiment has shifted quite drastically for this company. All of this, in my opinion, kind of started around the whole Pinterest acquisition, when there were rumors that PayPal was looking to buy Pinterest. Usually, if investors are happy with that, you'll see the stock either drop a little bit because, maybe they're take on some debt or whatever, or you'll more likely see the stock rally. In this case, that kind of marked the point where investors lost confidence in PayPal, and it's just been selling off ever since. The reason, in my opinion, was because when that was rumored, investors probably thought, hey, is PayPal concerned about their growth? Are they looking for acquisitions now outside of their core fintech competency because growth is slowing down? A lot of investors thought that, they sold off on the stock. And now, fast forward to this earnings report, it seems like that sort of thinking was true. It's quite remarkable how the market can actually be seeing things much further in advance than, what we actually see individually. So it's always important to pay attention to why stocks drop, because there could be some underlying story that isn't super clear right now, but will be in the near future. So, if your favorite stock is down huge, try to understand why that is, and sometimes you'll find opportunities where a stock drops because the market's absolutely wrong on it and the view is wrong on it, and those are opportunities you want to buy into. But in this case, it seemed like the market saw this coming. Kind of saw this coming, obviously not to the extent that they reported, because it's down huge even after that. But, the downward trajectory has continued for the last few months. The other concern that we obviously have to touch on is Cash App from Square. They've been stealing market share away from Venmo for a while now, and they've been growing their user base quite substantially as well. And that kind of tells investors that, the whole Venmo platform that PayPal has may not be as moaty as people thought it would be. It's not that sticky of a product. Switching costs seem to be pretty low. Consumers are going to switch over to Cash App if they find the experience is better, or more if their friends use it or whatever. So this, of course, raises the question, okay, can PayPal actually maintain their user base? That's kind of where the business is at today, and PayPal's kind of made it clear that they're going to focus now on maintaining that user base as opposed to trying to spend to get new customers. And I think that's probably a good idea. Try to solidify this ecosystem that they're building, really push value to the customers so that they're not looking at Cash App and saying, let me give it a try and see which one's better. So I think overall, a lot of the concerns from this earnings report were warranted for this stock. They aren't growing like they're expected to. Valuations are coming down. Their future doesn't look that great in the short term, and competition seems to be heating up here. So, understandably, investors are selling. Now, here's the thing. Long term, I think PayPal is going to be just fine. They may not compound as well as they have in the last, say, 5 or 10 years, but there's still a good opportunity for the stock to do quite well over the long term. It's still a very well-run business. They're generating a ton of free cash flow. They have a ton of users, hundreds of millions of users on their platform. So they're definitely a product that's here to stay, and I think they're kind of one of the leaders when it comes to fintech and the future of fintech. And there's also the whole Amazon partnership that's coming out soon, which, maybe that marks the bottom for the stock. So there's catalysts, and there's, trends, secular trends that are helping this company move higher and become bigger. But for now, it seems like investors are kind of in a wait and see state, and they want PayPal to really prove that they can grow after this quarter that we just saw. So I think, I'm not necessarily bearish on PayPal. I think a 30p is a bit too high now, considering the growth that we're about to see. And I think, if we see PayPal in like the low 20s, that'll be a pretty attractive valuation for the company. So I think, in the foreseeable future, we may see this actually trickle down lower as PE contracts more and more. Maybe we get someone like Bill Ackman to come in and buy some of the stock, and that'll signal a bottom. Who knows? We'll see. And I think that's kind of, the summary of where investors are at. They're just gonna wait and see what happens before they buy in heavy. Anyways, guys, hope this video was valuable. I plan to make one on Spotify and Facebook as well, because those are two other stocks that have been beaten here after hours. Let me know in the comments down below if you want me to cover those stocks as well. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.